Well, welcome to Midcap Masala, and it's that time of the show where we start interacting with corporate voices from the broader end of the market. So first up, let's interact with a company who's just come out with its Q4 operational update on the value retail front. That's V2 Retail. Let's get into a conversation with Mr. Akash Agarwal, whole-time director at V2 Retail. Akash, good morning and thanks for your time today. Overall, decent set of updates coming in from your end. I only wanted to get some better clarity on the SSSG number, which is coming at 7.7% this time around, which, yes, if you compare it to Q3, that 2% number that we saw in Q3 is a sharp uptick. But if I take the adjusted or that normalized number that you had reported in Q3 of around 12.8%, this is significantly lower than that. Talk to us about how the SSSG has shaped up this time around and what have been some factors at play.
Sure. Hi, good morning. So January usually is end of season sale for us because we put a huge discounts on winter products. But this year we did much lesser discounting. That is why it had a slight impact on the SSSG in terms of sales. But when you look at GP per square feet, then we're doing much better. So if you look at this quarter in isolation, you would see a skewed number because of less discounting in winter. But if you look at the whole year, SSSG, we have almost done 9%, which is on track with our guidance of 8 to 10%. And our revenue growth was almost 61% for the whole year, which was much better than our guidance of 50% revenue growth.
So, point taken over there, Akash. And, I just want to talk about the FY26 guidance also. Your guidance was 8 to 10%. You have achieved that number at 8.6 thereabouts. Talk to us about what lies in store for FY27. Are you looking at reaching the upper band of this guidance, or are you looking at hiking this guidance overall?
So I think we are sticking to our old guidance for FY27. We should do at least a 50% revenue growth on top of the 61% that we did this year. And we should close the year at around 500 stores. So we opened 136 stores this year, and we will open another 150 to 175 stores this year, continuing the good momentum that we have.
All right, that's about the store opening. Hi, Akash. Morning, this is Shrishti also joining in, but give us some sense that which geographies will you be targeting in order to open the new stores?
So we take this decision according to data, and we have stores in almost 25 states now, and we have opened 136 stores. So new data will be coming in every month. So about 60% of the stores will open in core geographies where we are already very strong in. But the other 40%, the decision will be made according to the performance in different states. For example, Karnataka and the South has been very good for us. So we opened almost, I think, 13 new stores in Karnataka. So similarly, all the new states, I think we entered 8 new states this year. So whatever state gives us better numbers, we will focus on opening more stores there.
Okay, so that sounds good. Let's talk about the revenue guidance. You've been consistently growing at a very high percentage move on a year-on-year basis in all the quarters of FY26. You've seen about 50 to 60% growth in your revenues and sometimes slightly more as well. Talk to us about what happens in FY27 as your base increases. What is going to be the quantum of revenue growth that you're targeting?
So like I mentioned, the revenue growth we're targeting is around 50%. Around 8 to 10% will come from the SSSG from existing stores, and about 40% will come from inorganic growth, which will be from the addition of new stores.
All right, but Akash, also give us some sense that of late there's a lot that's been happening with respect to the raw material cost. I'm sure that what all you must be sourcing will be the final products, but give us some sense that has there been any uptick in terms of your costing of the purchase, especially in the last 1 month?
So we haven't felt the impact yet, but definitely the yarn prices have gone up, packaging material prices have gone up. So there will be an impact in the near future. So I would say the average cost would increase by 2 to 3%, which includes packaging, transportation, fabric, cost of making. So, but that will be throughout the board and for every other retailer as well.
But 2 to 4% in the coming month or in the coming quarter is your estimate?
In the coming quarter.
All right. But Akash, we believe that along with that, do you believe that it can actually impact the demand in any way, or do you believe that 2 to 4% will be just marginal to absorb by the consumers?
I think our demand is pretty inelastic because we think the price point that we're selling at, it's basically a necessity. And we do almost 25% kids wear. So in kids wear also, the demand is pretty inelastic. And just 2 to 3% cost increase should not have a significant impact in demand. We should be able to, sustain the demand that we've been seeing.
Okay, so that sounds optimistic going ahead. And what does this, Akash, what does this do to your average selling price? Any visibility over there? Last time we interacted, you told me that you're not actively looking at increasing that metric, but what's the outlook over there?
Yeah, but this is a different situation. So there is supply side pressures. So whatever impact it has, we can't absorb everything in our margins. So there might be a 3 to 4% price hike as well.
All right, and we watch out for that. But so good having you on the channel today, Akash. Thank you so much for your time and great chatting with you.
Thank you.
All right, so that was the management of V2 Retail. Yes, of course, very strong performance and quite optimistic in the times going ahead as well. But with this, viewers, it's now time to slip into a very short break. Don't go anywhere, lots more lined up on the other side.